Hi everyone, welcome to Full Circle Trader. I hope everyone is doing well. Today's video is particularly for those who have just started out in trading, or if you are someone who want to understand that how to start the trading, this video is for you. In this video, I'm going to cover most of the candlestick basics. So please watch the complete video because in this video, I'm going to cover a lot of basic and fundamental aspects of the candles. And after watching the complete video, you will be able to understand how to understand a formation of a candle, how to read and interpret different candlestick patterns. So with that, let's get started. So the first question comes that why do we use Japanese candlesticks? Because there are so many different charts which are available in trading terminal like bar charts, line charts. But why do we use Japanese candlestick charts only? So the first and foremost reason is that candles help us to determine who won the battle between supply and demand. Now, what does that mean? This means that the candles give us a very clear picture about who is aggressive and powerful at the moment, who is winning the battle right now, right? So how do we know that? That based on if the momentum is increasing in form of wide range bars, or is it decreasing in form of narrow range bars or narrow body bars. So that is why we use candlestick charts, because they represent the battle, the mindset of the traders so clearly that it helps us to take the decision faster. The second reason is that it tells us that how traders have acted at the moment. So if, let's say, at the support, the market is making wide range bars, that shows that the traders are quite aggressive in buying the market. Or let's say if we have the bearish wide range bars at the resistance, that tells us that actors are quite aggressive in shorting the market because of their interpretation, because of the psychology which is prevailing at the moment in the market. It also tells us their current beliefs and expectations that where this market is going to be in next 5 minutes or next 1 hour or even in next few days, depending upon the time frame they are trading at. The third reason is that when we combine all these candlesticks together, so they form a kind of arrangement, and these arrangement of candle tells us the the recognizable patterns which we can very easily understand. And they these pattern tells us that where in next few trading sessions the market is going to go. It tells us the direction of the prices, and based on which we can take our trading decisions. So in short, these Japanese candlesticks provide us a very clear picture which helps us in taking the decisions quickly and making the right trading decisions. Now let us understand the basic formation of these candles. So as this candle tells us that this upper shadow of the candle is the high and this is the low, and these highs and lows are being formed based upon the buy and sell orders that traders send to the market based upon the time frame. So if it's a green candle, it opens somewhere here and it closes somewhere here, that forms the body of the candle. And the range of this entire body of the candle tells us if it's a wide range bar or it's a narrow range bar, and if the momentum is increasing in the market or is it decreasing, and who is most importantly, who is winning the battle. So if we are seeing the big range bars at the support area, that shows that bulls are very aggressive, and they know that this market has come down to a level where it is right thing to do to go very aggressive in the market, and which is why they are buying with their full power, which subsequently forms a wide range bars in the market. On the contrary, we have a red candlestick bar which opens somewhere here and closes somewhere here. High and low are exactly same as the green bar. because highs and lows are being formed based on the buy and sell orders that traders send to the market at the time frame in which they are trading. So let's say if you are trading in a 5-minute chart, so basically when the market closed at 3:30, you have this last candle here which has this high and low and this body. And if you are, let's say, trading in a daily time frame, so this is the day's 1-day candle, which has open, which has closed above its high and has formed a big range bar, or a bar which has a full complete body with small shadows to either sides. Now the interpretation of the candle is that if instead of this candle, if we have a candle which has, let's say, a narrow body, right, so it tells us that the momentum is increasing. So for example, let us assume that the market is falling and it has come down to a level where we have a prior support area, but still, instead of having a big range body, we have a small body, right? It tells us that buyers are still not very aggressive at the moment, and they are waiting for the right time or the right pattern to form, or maybe they are waiting the big money, the smart money, to first jump into the market, which we as retail traders can recognize in form of big wide range bars, because these bars are basically formed by the smart money, right, the big money, the institutions, the hedge funds. And when such bars formed, we come to know, we realize that now the buyers are getting aggressive at this location, and this is the right time to go with your full power. So there are only three main interpretations of the candlesticks, and any time in the market, candlesticks must be doing either the three of these. So either there would be a momentum which is increasing, or is it slowing, or it's reversing. Now these different type of candlestick concepts or formations, it can form in multiple ways, numerous ways, right? And when we talk about these different formations on the chart, I'll show you that how these formations happen or they form in the real time. But these are the only three things which a candlestick should do anytime in the market, right? And it has rightly said that prices can only be doing either of the three. So apart from these three things, there's nothing that price is doing or the candlestick is doing. Like each of the above candlestick concept can form in different ways. So as I said, a slowing momentum could come in form of a small body bar, a narrow body bar, or it can come in form of a bottoming tail bar or a topping tail bar. So there are different variations in which these three formations or the concept of candlestick can appear anytime. Now the very important point is that the location where these either of these three happens, that is the key factor, right? So if, let's say, momentum is increasing, so where is it increasing and how is it increasing? What is the current location? So if, let's say, if the current location is support, but we have a big red wide range bar, what does it tells us? It tells us that buyers are not able to take the control from the market, right? They are there, prices are at support, right time to buy, but still sellers are so aggressive that they have taken the full control of the market and buyers are not able to win the ground. Then we have another very important point here, that does any of the above three forms of candlestick has a follow through or no follow through? No, this is so important that let's just understand. Let me just clear this up. So let's just understand that we have a support zone here, and market was in a downtrend, but then as it hit the support, we have a big wide range bar, a green wide range bar here, that has taken out the high of multiple red bars here, right? But after this wide range bar has formed, does it have a follow through? Meaning, does it have similar kind of bar which increase the momentum and move back to the from where the down move have started? Or instead of that, if it just have a small body bar here, right, or a topping tail bar here after this green wide range bar, that tells us that although we have the increasing momentum in this bar, but this bar doesn't have any follow through, or as we call it nft, no follow through, which means that the weakness is still there in the market, and prices will sooner or later come back down to the support zone. Now they can either break the support, or they will come down at this area and retest this support, and then again it will start to move back up. So all these concepts together, they form a picture that tells us that which direction of the trade should we enter, which is why it becomes very important to understand that how these candlesticks are forming, where they are forming. But let me also tell you at this moment that candlesticks are in itself, they are not only the reason to take the trade. There are other technical concepts which we need to combine with candlestick, which enhances the success rate in the market. So with that, let's just move on to the next slide. So this is a very important slide, and I want all of you, especially the new traders, to pay very and close attention to this slide. Now, whenever we start, our chart analysis, we always try to start with the wide range bar. Why? Because the wide range bar tells us that there is now a strong emotion which is playing into the market. It tells us that now the momentum is increasing, right? So this is our starting point. Then we go further and see what is happening with the other bars which are now coming on the chart. So all these bars here, whether it's a bottoming tail bar, so a bar which has a small narrow body at at the top, and a long tail is called a bottoming tail bar, and this bar which has almost equal in size shadows to in comparison to this body. Then we have a topping tail bar here which has body to its bottom, and a long tail at its top, and then we have a very small body here, and which has small tails as well. So all these bars in itself are telling us that the momentum is slowing. All these are different formations, various formations of slowing momentum, right? So this bar here tells us that although the momentum is slowed down, but the other part of the message that this bar is giving us is this long tail. Now this long tails tell us that there was a time when this bar was under the formation. At its low, it was a green bar. So this bar, we know in the in the second slide, we have seen that in case of a green bar, we have open at the bottom and close at the high. So this bar was open here, and then it moved down to its low, forming a red bar. But then buyers took the control, right? They came with their full power, and they brought the prices back to its higher level, and eventually this bar has formed as a green bar here, because now it has a closing which is above its opening price. So this bar, although it's a slowing momentum bar, but it tells us that the buyers took the control, in particular this bar here. On the other side, we have this narrow range bar which has completely stopped the momentum. So let's say, for example, if you have good momentum which is forming in the market, and then you have such kind of bars forming, that is giving us a message that that momentum has completely stopped, and prices might either consolidate or will come down soon. The same message is for the red bar here, the wide range bar, right? So we again start with the wide range bar, and we have same kind of messages. Now I'm showing you both sides of the candlesticks here, the bull side, the bearish side, because they can come in different formations with different psychology, with different flavors. So our instead of a green narrow range bar, if you have a red narrow range bar, that is giving us a different scenario. So let's say if the market was up, and instead of green NRB, you have a red NRB here, that is telling us that the momentum is going to reverse soon. So in it itself, it is giving us a kind of reversing pattern here. So which is why we need to be very careful that whether it's a if it's a narrow range bar, or if it's a topping tail bar or a bottoming tail bar, whether it's a bullish, it's green in color or red in color, right? So all these things, when they come together, they give us a picture about what is happening at the moment, what is the psychology of the traders, and where exactly they want to see the market going, right? So as it says, when a narrow body like doji, which what it is talking about here, or a narrow range bars like bottoming tails or topping tails, which are there, right, form, they indicate that the slowing momentum. So all these candles in itself tells us that the momentum is slowing. However, they have different interpretations based on which location they are happening, which location they are forming, right? So let's just clean this up and let's just move on to the next slide here. Now, again, let's try to read the message here. Let's say, as I mentioned, that we always start with a wide range bar, because that is the first starting point, that give us some interest on that particular chart, whether it's an index chart or a stock chart. So if it has formed a big wide range bar at support, or a red wide range bar at resistance, that is our first entry point, or first point of reference to take interest in the chart and read further. But let's say if we are understanding what is happening at the moment in the chart, and it has formed a good wide range, a bullish wide range bar, or as we call it, plus WRB at the support zone, right? But eventually, let's say it is a daily candle, and it has it is around 230, but at the time of closing, which is around 330, this bar has become like this bar. Let us just assume that if a wide range bar at 230 eventually becomes a topping tail bar at at the time the market is getting closed around 330, what does it mean? It means that although the buyers were quite aggressive whole day and they were buying, but eventually something has happened in the market that at the time of closing, the bar has formed a topping tail, which in itself means that the sellers has taken the control, or they are in control of the market, right? Same thing is with the the bearish wide range bar. So say, let's assume that it's 2 or 2:30 right PM of the trading session, but at the time of closing, this bar has become a green bottoming tail bar. What does it mean? It means that the buyers have taken the control of the market. Maybe you have not thought the candlestick like this way before, but this is this is the actual scenario of price action. This is what happens on a day-to-day basis. So please start thinking in this way, that how the green bar transform into a red bar. So this is one of the transitions that we need to understand, because how a green bar is transitioning or transforming into a red bar at resistance, that tells us, that gives us a lot of story to make the trading strategy, right? So for example, I'm trying to give you so many examples here so that you can understand things clearly, and it will help you to form your own trading strategies. So for example, we have a resistance zone here, right? And let's say prices were kept on rising and they hit this resistance zone where we have big red bar like this, to the left, and then prices have hit this resistance zone. And then at the time of market open, let's say you have a gap up opening, but then eventually at the time of closing, this gap up opening, which was looking as a very strong market, a bullish market, has eventually formed this red bar here. Now what will you think, or how you should interpret the market now after this red bar here? Now no, the expectation which was continuing here till here will definitely gonna change after this bar, right? So all those bullish traders who were thinking of going long in the market will now think that this market might move down and form or give us the shorting opportunities. So this is how a pro trader try to read and interpret the different formations of candle, because they form on a day-to-day basis, which is why it becomes very important for you to understand that how to read them, how to interpret them, right? And I'm keep repeating on the same thing because I want to just imbibe this thought process in you, that eventually any kind of bar can turn into a different form of a bar. What does it mean? What kind of story it wants to tell us, right? So we have to think on those lines. So with that, let's just clean this up and let's just move on to the next slide. Okay, so now let's start finding out the the same kind of candles that we have just gone through, and let us try to find out that how on a real-time basis these candlesticks form. So this is a chart of Nifty, and we'll start from the left to see right what kind of different formations have come. So let's just start with this red candle here, right? Because this is minus WRB, or a bearish wide range bar, right? Now, for example, let's think that a wide range bar, as I have been keep repeating it, that is a starting point, and right, and it tells us that the momentum is increasing. Then we should think that why, once this red big wide range bar has formed here, the market has reversed, right? We have to start thinking in such a way which is very logical, because if you think logically, it will give you the correct and the objective analysis of these candlestick patterns. So the market has reversed from this low here after this bearish wide range bar, because this bar has not initiated the move here, right? So this was not the first move. This bar has formed after the multiple bars in the same direction, and it has formed right near to the prior support area, and which is why it becomes very important to look to the left. So this, when this wide range bar has appeared, it has come down to a level where there was a previous support zone, and from where the prices have started moving up, which is why this wide range bar, instead of further moving down the prices, has basically turned out to be as a reversal bar, and from where the prices have reversed to the other side. Now just look at this bar here, right? If you remember from the previous slide, let me just show you that previous slide where we have the similar kind of bar here. So see, look at this bar here, right? Now compare it with this bar. So this bar has opened here, right? It moved down further, and when this bar was under formation, it was a red bar. But then eventually what has happened, now that buyers took the control of this bar, and they moved the prices all the way back to its highs, and the closing has come above the opening price, which made this bar as a green bottoming tail bar. So the message at this bar was very clear, that bulls are still in control of the market, and they don't want to lose the grounds they have taken control of here so soon, right? But then again, what is the next bar is telling us? Now if we just go back again to the previous slide, right? So I told you here that let's say we have a wide range bar, but does it have a follow through, right? So that becomes very important. I just give me a moment here. I think it was this point here when I was talking about that, either of these concept of the candlestick has formed, but does it have a follow through or a no follow through, right? So what we have seen in that chart here is that the momentum is in the control of buyers, but does it have a follow through? It doesn't have that strong follow through, and we have a small or a narrow range body, or NRB as we call it, that is telling us that now the momentum is getting slowed down, right? The message was, even here it was clear that the momentum is slowed after this big green bar. We have a slowing momentum message here, we have slowing momentum message here, and we have finally finally it told us that now probably the time has come when the market might reverse, because after this slowing momentum we have a gap up opening, and the gap up was a narrow range body, which means that the buyers wanted to take this market back to its highs, but they eventually failed. And then look at the next bar, right? So this is the wide range bar igniting that has initiated the move to the downside, and which is why we have again a momentum move to the downside. Then we have again a wide range bar at the rising 200 MA, and look where this wide range bar has formed. It has formed where we have the prior support area. So which means that when prices, bulls were trying to take the control right here, but they failed, and when prices move down and come back to its support zone, they again tried to took the control from the sellers, and which is why we have a bullish wide range bar here. But again, does it have a follow through? It doesn't have the follow through, right? And because this wide range bar failed to have a follow through, the prices moved down further. They broke this support zone here. They came below the rising 200 MA, right? And we have seen market going further down and down. Now, another very important candle here, right? This candle has formed, this candle has opened here, and then sellers took the control. Sellers were in control, and it was a complete red bar, right? It has moved down even below the rising 200 MA. It has moved below, or it has broken the low of this red candle here. But then eventually what has happened, maybe around closing time, the buyers came into the market very aggressively, and they have given all their power to this candle here, and then eventually we have a bullish bottoming tail bar here, that that gives us a message that these red candles now have failed to have a follow through, and this market might move down to the upside, right? And then we have a wide range bar that has completely taken out the high or the resistance which was formed by this bar, right? So after this bottoming tail bar, we have small bodied or a narrow bodied bars, which tells us that the prices are consolidating. They are slowing. The momentum is slowing. There is no after this bar, there is no aggressiveness from the buyers. But then eventually, when they consumed all the supply, because when prices came back to this location, they were near to this resistance area, and when they consumed all the supply which was coming here, then they given again their full power, and they came with a same kind of aggressiveness. They came here, and it has given a breakout candle which has taken out the high of these consolidation bars, and then prices move further from here. So, I hope the message is clear. We should read, we should do the bar by bar analysis. We should try to read every and each and every candle that forms on the chart in a real time basis, because that is how we are going to understand that where the direction can move, in next 5 minutes or 1 hour or 30 minutes, 15 minutes, the time frame that you are trading on. So I hope that, after watching this video, some of the fundamentals and the basics of candlesticks might get clear, and you might have, got some clarity on the basics of candles. And if you have, liked the video, please give it a thumbs up. Please subscribe the channel. And if you have any questions related to the candlestick patterns or the bar by bar analysis, you are most welcome to ask them in the comment box below. And with that, let's just call it a wrap and catch you soon in the next session. Till then, take care. Bye-bye.